Welcome to Local Supporting Locals, number 5. Already, Paulina, Tony, and Valerie.
Is it 5 or is it 6?
Oh,
sure it's 6.
It is 6 actually. Yeah, that's the one so it is Local Supporting Locals number 6. It is a fantastic initiative that Paulina, Valerie, and Tony brought to life. And we've been happy to support with the small network that the Venture Center has gathered around Powering On. And we will continue to support ongoing. I am part of several group discussions. I feel this is so far it is a very genuine, very useful conversations that take part at Locals Supporting Locals. So welcome to number 6. If you're not talking, feel free to put yourselves on mute. We know that you may choose not to show your camera, but if you want to come in, we would otherwise meet in a room. So it would be nice to see you today. Over to you, Paulina and guests.
Awesome. Thank you so much, Pascal. Well, welcome everyone. Locals for Locals just was an initiative for us originally to kickstart and get over the chaos COVID-19 and the lockdown did for us, but it did so much more. So Valerie, Tony, and myself, we've decided that we're going to bring this initiative to you guys every week for long term. It's not just for the COVID-19 lockdown, because we are obviously already in level 3. Every week we discuss a different subject, and the subject is really based on what you guys want information on and what you subjects you're interested in. And today, before I introduce our things, just a couple of things, feel free to ask any questions you like in the chat. We will ask Nick and Karl directly while we are here. So it's not just us having a conversation. You guys are encouraged to be active and ask the questions you want to ask today as well. The other one is as if you haven't seen, we are recording this. So this goes live in our Facebook group a couple of days later for people who might have missed the opportunity to log in at this time to actually still listen to it. But you know, you guys are here, you guys have access directly live to the experts. So let me introduce the experts today. We have Karl Ruby from Medley Accounting. He is an expert everything which has a number on it, so it's everything financial, but also very interesting investigations around IID fraud and bank fraud and all that kind of stuff. So we might get a little bit of a different insight on what is right and what is wrong, or as we toyed with Valerie and Tony, what is money versus sense, like common sense, right, in today's market. The other person we have with us is Nick Kerr and his guitar. No, he's probably not going to sing us a song, but he is with EC Credit and a personal investigator as well. So everything debt collection, cash flow, money, IRD, and yeah, fascinating subject for most of us who are listening to it. We try to avoid it, but today we're going to have an open and honest conversation with the two of them. And because Valerie is in our group, is the accountant, she will be taking over some of the questions today. So Valerie, I'll let you start.
Thank you. Well, welcome everyone, and welcome to our guests, Nick and Karl. So thank you for your time today. And I would like to actually say thank you to Pascal for that lovely opening. That was really sincere and beautiful on your behalf. So thank you for that. Now, well, first of all, I would like to ask both our Nick and Karl, want to dig in straight into wage subsidies, and you know, the government paid out $10.4 billion, and last Friday Grant Robertson spent about 20 minutes talking about the audits they're performing. So I guess the first question, who do you think they're auditing, and what would be an example of wrongdoing? And maybe you know some case scenarios or heard something and you can share with us.
I think basically what they'll be looking at doing is the government's intention was that everyone would be audited I think in the reality of things, for them to audit every single business that's applied for the subsidy is going to be a mammoth task. I know from an inland revenue perspective, all our audits and stuff that we used to conduct were risk-based, based on anonymous information, data matching with various other government departments. So you can imagine when the work subsidy was first thrown out there would definitely be data matching occurring between Ministry of Social Development and Inland Revenue, particularly around, are those employees that these companies are applying for employees? So from that perspective, I'm picking the audits will be based on a risk perspective first, obviously looking at the highly suspect applications and then work their way down. We could find in 2 or 3 years' time they're actually going through and doing audits just on everyone to make sure that it occurred. But bang for buck for a government department, it will be based on risk. And some of the ones that Grant Robinson were talking about will be where there's been complaints from employees that have been working for a company, the company's applied for the wage subsidy, hello, they're all of a sudden made redundant and didn't get any of it, and it's been kept. We've heard through the grapevine in our business that there's people that have applied for it under 3 or 4 different entities that they run. They may not actually be getting wages from all of these different entities, but because they're shareholder employees or whatever, they've applied and said, oh, well, I'm part-time in all of them, or I'm full-time in these 2, and then part-time in these other ones. So there's all sorts of things like that, but I'm guessing that it will be mainly risk-based at this stage, and that will be based on complaints to the Ministry of Social Development hotline, and also anonymous information that people can put into the various departments through their Dobbin lines or email addresses, to be fair.
Thank you. Nick, any thoughts on that?
Well, what we'll see is the usual suspects that we're normally chasing for fraud and multiple identities. Like there's a lady running around town at the moment with 6 different identities, with 6 different IRD numbers and 6 different wins working for families, you know. Like people like that are just going to take advantage of it, but they always will. I'd say the construction industry is probably going to come under a little bit of scrutiny at the moment. Like the gentleman was saying, you're going to have those companies that are going into receivership or into liquidation or making people redundant. Like that large magazine company that folded and actually refused the subsidy, even though they could have just given that to their staff. I think that was a bit unfair of them, but I don't think that's a fraud thing. That's probably just a business decision to make. But I would say that the people that were always chasing for benefit fraud and IRD fraud are going to probably help themselves to a couple of $1 million between them. Yeah, but it's those contractors that are contracting to a few different entities. Like they might have a courier run or Uber Eats or different part-time jobs that are applying for a full-time subsidy because they don't check it, as far as I can see. I mean, mine came through in 45 minutes as a contractor.
So I have a couple of questions here. First is, who are they chasing? Are they chasing the individual employee or the different entities who have actually applied for the subsidy? Because I mean, some of us have like 2 or 3 jobs, right, or 4 different jobs, and no one said at the beginning that the entities had to communicate with each other of who is going to apply for the subsidy and who isn't. So no one is really at fault here, right? Because the staff members might be doing 4 different jobs and the 4 different entities have applied for that, and suddenly they're earning more than they would have earned in those 4 jobs, right?
I think it's who applied for it. So like I run 4 companies myself, 4 years now, and if I was applying for 4 different ones, then of course I'd be the one doing it. But if I had an employer as well and they were applying independent of me and there's no fault there, you might be asked to pay something back, but you won't be charged with anything, as far as I understand it.
And the other question I just had is, how do you manage to have 6 identities and 6 IID numbers? So I want a little
We
bit
don't
more.
want to know that.
There might be a different call.
No, she actually, there's probably a few people here that know this person too, but I won't say any names. Tony definitely knows her. Now she is just extremely intelligent, and yeah, there's basically she's been married 3 times, and each of those 3 times she found a way to have a new identity birth with each of those, and then she was also adopted, so she used her birth name because she had a birth certificate and an adoption certificate with 2 different names on them. It's the most advanced I've ever seen.
That's really fascinating, but yes, will be another call. Back to you, Valerie.
Well, thank you for that. That was really interesting. So to sum it up, we can say that it's if it's a small business, they applied for the subsidy and they passed it on to their employees. We shouldn't foresee any issues there. Would you agree with that?
Yeah, I think it's going to come down to, as long as the companies that applied or the businesses that applied met the criteria.
Yeah.
That's where they might come unstuck, and the audit might reveal, well, you didn't qualify for the subsidy, you haven't had the 30% loss or anything like that. Then there could be the government asking you to hand it back. But if it was applied for in good faith, and there wouldn't be any issue.
So just following up on that, is you applied for it, and obviously the worst case scenario is that you're going to get asked to pay it back, unless it's completely fraudulent. And then what's the ramifications if that is the case? For example, making people redundant and then applying for it, or applying for it, putting the company into liquidation.
Well, that's a Companies Act. That's a Companies Act offence. So you'd be criminally charged, I'd say. Under that, but that's very expensive.
Yeah, it depends on the intent, really, Tony. If it was completely fraudulent and you've misrepresented on the application, there could be using a document for gaining a pecuniary advantage. But then it could be simple as you've breached the Statutory and Declarations Act. So there's all sorts of different things. There's a realm of criminal charges you could face. But again, it comes down to, I can't imagine the government spending a truckload of money and tying the courts up for months and months and months and months just on small misdemeanor stuff. I know from the IRD perspective, when I was working there, we always had the criminal punishment we could enforce if we wanted to, but most of it was in a civil matter. So you'd get use of money interest or payment penalties or some kind of other civil penalty, for want of a better word. I would say that the government will make an example of the serious offenders, but if it was sort of you've applied for it, it turns out you didn't have to do it, there's not. I think the worst case scenario there might be pay the money back, and there could be an interest component or some kind of penalty, which would be monetary or something like that. I think you only see serious charges in serious instances.
So what?
Sorry.
Go ahead, Nick.
I would say that one case that will probably come out, and this is me making a prediction, would be companies that sell a flat Italian bread-based takeaway that have a large migrant workforce. I would say there'll be a couple of things coming on board there, because what a lot of them are doing, them as being fast food restaurants, is they have a lot of people on casual contracts or migrant workers that are on the way out, so they're about to leave anyway. They could be applying for these people, and by the time it gets paid, this person's gone. That could be the case.
So the best way forward is basically to refund the money, isn't it? To return the money back to the government. That will be the honest way to do it.
Yeah, it would.
So just if going back a step when you talked about it's whoever applies for it, to the accountants in the room, if the business has given you the responsibility or the authorization to apply, then you as their accountant would be liable for applying? If you're the one that actually applied for the thing, or is it because you're applying for that business on its behalf?
Well,
No, you're doing it
I
under
think an
agency.
account. Sorry, Nick.
You're doing it under agency. So basically, like if I told my accountant that my 5 cars are all company cars,
Yeah.
and they're not, and they're applying those costs against my, this is what my accountant just told me. So,
Because you've already asked that question. Yeah, okay.
yeah, I need to, then they're using the information that I've given them in order to do something for me. So that's done under agency. The only way that they'd be culpable in that, as far as I know, is if they knew it was wrong and did it anyway.
Yeah, that's absolutely right. So the accountant goes through kind of twofold there. First of all, yes, we are working for the client and following the instruction, but also we are running the tests in the way of, do we fit within this law, that law, we're breaking the law. And if to your best knowledge, you know that it is correct, yes, of course, it's fine. But if you know that something is wrong, you can always say, no, I'm actually not going to do it because I think that's an unlawful thing. And yeah, majority of accountants, I'm pretty sure, are very much switched on and they know what's going on most of the time. So, and we're not afraid to say, well, I'm sorry, this is not what we're going to do here. And but it's up to the person, because I think those cases where there was this negligence or pushing the boundaries, I'm sure there's people applied by themselves, and I don't believe they would have used the professional to do so, because no professional, well, can't speak for everyone, but majority wouldn't do it, I'm sure. But
yeah,
Carl, would you agree?
Yeah, I would agree. I mean, you know, we had some of our clients that we assisted, and again, like Valerie said, we were going based on their information, and sometimes depending, you know, sometimes you get a bit of a feeling, so you might say to them, well, we've done the numbers, it looks like you're going to get a 30% loss. You need to fill out the form and sign the declaration. That way it was back on, the onus was back on the business owner to do it. So.
Question, like, while we are talking about, there's some real scenarios here where people originally, like, no one of us knew it would, like, 4 weeks lockdown year, we knew that, but no one of us knew that there would be another 2 weeks of level 3, and who knows how long this is going to continue, right? So let's talk about a couple of examples. For example, the people who can't open in level 3, like that's your tourism restaurants who don't have takeaways, or your services like your beauticians, hairdressers, etc. They would have applied for the subsidy going and saying, yep, we'll be fine for a month, we can make it happen. And suddenly they're going, actually, here's another 2 weeks and we don't know if we need to open again. So potentially going and saying, actually, you know what, I can't last any longer, I'm going to go into liquidation, right? But at the time when they were applying for the wage subsidy, they were fully intending on having the staff and the businesses running for the 12 weeks. What happens there? Like, do they have to, once it goes into liquidation, does the liquidator have to pay it back? Does the liquidator have to pay it to the staff? Like, how does it work?
So I would like to think that if the business has gone in, applied for it, thinking, right, we can probably last 4 to 6 weeks, and then it goes longer, and then it gets to the point where they can't carry on any longer, the whole idea of that subsidy, it was paid out to cover a 12-week period for your staff. $5.85 full-time staff a week, and $3, whatever it was, for a part-time staff. I think as long as the staff actually get that money through, you know, to cover a 12-week period, or the money shows up against the employees, there isn't a problem, because there will be businesses that are going to fall over the longer this goes on, or we might get 1 or 2 weeks out of it and it just doesn't work because people's ways of shopping or spending money have changed. So I think I think the big crux of it is, as long as that wage subsidy has been paid to those employees as it was designed to, I don't think there would be a problem with it. And if the company does fall over, it falls over. Where the problem will arise is if we get to end of this week, week 5, and the company goes, no, we're not going to be able to open up, but the other remaining amount of that wage subsidy doesn't get paid to the employees. That's where the business owners will have a problem, because they've obviously applied that money to something other than their employees.
So would you recommend, if someone is going into liquidation or thinking about going into liquidation, receivership, one or the other, to pay it out to the employees as a lump sum before they go into liquidation?
No.
Yeah, there are issues with that around the contractual agreement and employment and all of that, and Holiday Act.
So how can you do, how can you...
Nick, you go. Nick, you probably can expand on it quite nicely.
Well, because I do a lot of liquidation work through my investigations company. So we work with liquidators to prove voidable transactions and preferable claims. I would say that if you're being paid in advance for services you haven't rendered and there isn't that money owed anyway, like holiday pay or something like that, maybe you could offset that as far as holiday pay is concerned or whatever. You can make that part of it. But I would say that you'd be opening your staff up for maybe some preferable clawbacks. I'm not sure how the wages, how the employment legislation works with the insolvency law there, but I would say that you'd have to do that pretty carefully, and you should probably ring the employment authority on that to see how you could do that without disadvantaging your staff.
Because, now the employer is stuck between a rock and a hard place, right? They go and say, I've claimed because I in reality wanted to run and I thought that I could do it, and now I can't. I'm doing the best I can by putting the company into liquidation. If they don't pay it out, they are in it with the government. If they do pay it out, the employees and the employer are up for employment laws. So what's the best solution there?
Well, it's liability. Yeah, it's liability. So they'll have to pay it back if the contracts with employees expire or they're closing the company, which might lead to redundancy. Then the amounts that are left will have to be paid back. And of course, remember, and Karl mentioned that as well, the person is actually, the employee is actually in person in that cycle, and employer was merely an agent, because it will be a horrific job for government to directly talk to every individual in the country. So employer was in the middle just to collect this money and pass it on. So yeah, I think case by case, but yeah, ultimately have to consider liquidation side of things, have to consider employment agreements and redundancies. And of course, and the main thing is those money had to be passed on to the employees for 12 weeks. And maybe it's worse to chug along for 12 weeks and actually pay out this money and make sure that redundancy happen on week 11 or 12, where it's all paid out as a holiday pay or something. So just plan it ahead, so to speak, because quite important to manage these funds which were given to us as an employer in the correct way.
But also, I think it's quite important to have that money in a separate account, so not have it intermingled with company funds.
Yeah,
totally agree.
Just like PAYE and stuff like that, because you always see companies going into liquidation that owe a whole bunch of PAYE, but the secured creditors, or if someone's got a GSA or the bank's got some sort of deep security on it, they can claw that money out of the general fund. So I'd say if you have it in an employee fund and it's separated somehow, that would be prudent, I believe.
What are your thoughts, Karl?
There's about a week ago, there was an article on TVNZ, and it was basically saying the government have said employees will not have to pay back the money if the company goes into liquidation, because it was solely there as a support mechanism for employees. So I don't think you'd have to worry that if money was paid out, the company went back, a liquidator won't be able to claw it back, and the government definitely won't claw it back. And that was something that the government ministers come out from Ministry of Social Development and said that the wage subsidy paid out to employees is safe. They wouldn't be asking the employees to pay it back, because obviously the employees would have spent it on rent, food, and all that sort of stuff.
Mm-hmm.
So they don't put employees into a position where they'd have to, start stressing about now paying back a wage subsidy that the employer made a balls up on somewhere along the lines.
So correct me if I'm wrong there, Karl, and Nick as well, with the BFGS, or the Business Finance Guarantee Scheme, and the banks guaranteeing some and the government guaranteeing some, if the business actually received the money as that loan, then the business, there is no personal guarantees, and it's unsecured against nothing. So you could actually borrow the money, spend it, and then what would happen?
So is that for the big business loans?
Yeah.
That you can apply for. Yeah. So with the business loans, the government have said they will guarantee the bank 80%. So the business loans, the banks still have to meet their own lending criteria. It's not just you can apply for it and because the government will guarantee it, all good. So the banks still need to verify the company is more than likely going to remain insolvent. It can trade its way out of it. You've still got to tick all the boxes for the bank. We've found with a few of our clients that have tried to apply for it, the banks have been really, really good to the point where they're saying, well, look, instead of locking you into a 3-year repayment term on a loan, blah, 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 we're just going to increase your overdraft credit facility because we can see in 6 months' time you've got to claw your way out of it. So why would we lock you into a 3-month repayment? I think you'll find that the banks will be doing a lot of due diligence around this, that they'll be making sure they're only going to loan to people that are going to continue to trade and there's not the risk of folding. And I think if you were in that position, you applied for the loan, you know, with a pretty big certainty that you might not last 3 or 4 months, then you look at the realms again that you've applied for something when you probably shouldn't have. So again, you fall into those realms, the murky water of have you committed some kind of fraud? You know, you've applied for a loan when you really, and you're deep down in it. And if someone had a good look at the company, you could tell that there was no way it was going to trade out of it. But the banks have been very vigilant, and it's the government are guaranteeing the bank. The bank won't lose out on 80% of it. The directors, shareholders, I believe, have to guarantee the other 20% that the government won't cover.
Okay, that's cool. Thanks, Carl, for clarification.
Surely if the bank has an existing GSA over the business, that would then fall under that as well, wouldn't it?
I would assume so. It's all under the same criteria, but I think what the government has said is the government will guarantee the banks 80% of that particular loan, and it's only a 36-month payment term, I believe, or something like that.
Yeah, it's 36 months, and also the government will step in. The government will step in after the bank had a go at retrieving the money and stuff like that. But yeah, quite agree. Banks are very robust in the way of how they proceed with those loans, and they are asking for a lot of documents, and they know who will survive and who will not. So it's pretty good. So that kind of. Oh, Tony, do you have a question?
No, I was probably going to lead the same thing you are, Valerie. So this is all great about talking about doom and gloom and liquidations and business loans. How do we stop that from happening? How do the businesses get into credit control for the work that they've done, the cash flow management?
Yeah. I was going to propose to move to lighter topics. And I've got a question. I've prepared an imaginary scenario. So say we've got a business owner. They came back to work this week and obviously haven't earned much, but they have some debts. So would you suggest go and chase those debts, or would you suggest to kind of wait for a bit and not do much about it? So how do we approach the credit control right now today when we came back and cash is light and we're running around crazy working? So what do you do?
This be for me?
Yeah.
Yeah. I've just written an article about this actually on LinkedIn. One thing is, don't treat the next 3 months like the last 3 months have been. You've got a lot of clients that maybe before this were in quite a good shape and had quite a healthy future. Places like super yacht builders and anyone that works in Rotorua pretty much at the moment, Queenstown, all those places that are very overseas money dependent. What I would do is don't wait for people to start telling you lies, because people will tell you lies when they feel that there's no other option. So what I'd be going out to people with now is an acknowledgement of debt form, and just say, hey, there is quite a bit of money here that you owe us. We don't want to get to a stage where this becomes a fight. So why don't we now set something up over the next 3 months that this can get paid down, rather than us charging interest over the next 3 months and you having to pay that plus collection fees if you can't pay it. let's have a chat now and let's sort something out that you can pay us a smaller amount weekly and actually have that done, but have them sign an acknowledgement of debt form. So it actually cements that debt, because what will happen in the next couple of months is they will have a couple of months to find reasons not to pay you. So there'll be, oh, I've got a dispute with this. No, well, no, you don't. If it is in construction, make sure that you've used your proper payment claims rather than invoices, which cuts down your time to be able to dispute. But fight the fire while it's small rather than when it's huge. So say, hey, let's get this paid over the next 3 months. If it's like 10 grand, pay us 2.5 grand a month over the next 4 months. It's much better to lose 2.5% interest a month than 25% at the end of 4 months.
Nick,
so I
so
would say just be proactive about it.
Are you saying that on the top of normal agreement, would you go and kind of try to sign another agreement in a way of this is deed of acknowledgement of deed? So would you say you just not just negotiate, but you also try to sign another kind of form of agreement forward?
I would say to them, I would say to the debtor, and I've had this conversation probably 50 times in the last 24 hours. You'd say to them, hey, I know business isn't going great for you because it's not going great for us. Why don't we have an agreement now where just you fill this in so it'll satisfy my credit insurance or something like that, and let's come up with something that you can live with and I can live with, because if not, there's going to be something that's going to happen in the next couple of months that neither of us are going to be able to live with. So if you're willing just to fill out this little form, and I've got like a template here that all my clients can use, just you fill this in, and then after you've filled it in, let's come up with an agreement. Especially if you're a secured creditor. If you're not a secured creditor, you need to be a secured creditor. If it's a larger amount, because anything over, yeah.
Can you just expand, just for everyone else in the room, secured versus unsecured, what it means? So obviously accountants do know, but the rest might not.
So a secured, say if I buy a new laptop from Tony, which I'm going to have to because this is rubbish, this one. Say if I don't have an account with him, I will be paying cash for that, or FBOS or direct credit. Let's say that he lets me take the goods and I don't pay for it. At the moment, I don't have a credit account with Tony, so he has no right to come and get that back off me at all. If he's a secured creditor, which means that I've signed something and then he can actually register his interest in that laptop online, then he's a secured creditor. If I don't pay, he can come here or send someone much bigger to my place and grab that back legally. So all the banks are secured creditors. So if I don't pay for one of my Jaguars, then they can come and grab it. But if they're not a secured creditor, then they can't. So a secured creditor being a secured creditor gives you a registered interest in goods or money or whatever. What that also means is that over the next couple of months, a lot of people are going to be technically insolvent that haven't never been insolvent before. So their spending probably hasn't changed, but their income has. So their chances of being technically insolvent over the next 3 to 6 months is a lot higher, which means that you will be knowingly trading with an insolvent entity, which means anything that they pay you can be retrieved if you're an unsecured creditor and they have paid you rather than a secured creditor. And it's about $20 to register as a secured creditor, as long as they've signed your terms and it's got a PPSR clause in there. So if you've got anyone who's on account, especially if you're selling them goods, then you need to be a secured creditor. It's the cheapest insurance you can get. And it means that if they do go under, you won't have to pay back any money.
Thank you. So that's a good one. It actually brings us to another question around just managing cash flow, and maybe Karl will expand on it. So again, business owner comes in to work now and trying to make a little bit of money, and so what can we do? How can we manage the cash flow in a better way? And totally agree with the concept. What we knew before the COVID is completely different kettle of fish to what it is now. So cash flow management tips, who's got some?
I think I agree with Nick. I think having the conversations to get your debtors in is really, really important. Don't just sit and go, oh, they'll pay next week or whatever. I think you need to have those conversations, and I completely agree. You're better to get a little bit in, drip feeding, than get zero. Likewise, if you've got bills you need to pay, I think you need to do the same thing. If you're a bit light on cash flow because you're only just getting back into business this week, ring the people that you owe money to, say, hey, you know, things have been tight. We've been shut for the last 4 weeks. We're just getting in. We can only do X, Y, and Z. Can we organise to pay you X amount over the next few weeks? And then as things pick up, we can pay you more. So that sort of takes care of your debtors and creditors. I think the other thing that a lot of businesses need to do is they need to be smarter with the services and stuff that they need to run their business. So if you're, for argument's sake, you're a retailer, don't be spending, unless you're locked into a contract, which is a pain, don't be spending thousands of dollars a month on radio advertising at the moment, because you're probably not getting your bang for your buck. Look at some other cheaper option. Most of us are doing online shopping. You know, credit cards and PayPal have probably been getting a smashing over the last few weeks, and probably more so in the next few weeks. So maybe your best bang for your buck could be Facebook advertising or Google AdWords or something like that. Look at restructuring what you're spending your money on. Just don't sit there and go, oh, we need that, I have to pay for it, and just go and, you know, you need to reduce your spending as well, because that's going to have a big effect on your cash flow. If you're, as Nick said, if your income's here and your spending's normally here, you've got a big deficit to make up. So you need to bring your spending right down. You know, you can't be taking your clients out for coffees every 5 minutes because you might not have the funds. So it's just about being smart and really analysing what you need to keep your business going at the moment. And then as your income or your cash flow increases, then you can sort of get back to where a norm is. Everyone needs to look. We are at a completely different playing field at the moment. So,
Karl, would you also say or recommend, if you've been billing in arrears, bill in advance, get some deposits?
Yeah, I would be. If you're providing services or, you know, product, I'd definitely be looking at getting, you know, minimum of 25% deposit. We've been saying to a lot of our clients that provide product like tradies or something, make sure your deposit is going to cover your the product that you need to buy to do the job, because that way you're paying your creditors, but at the end of the day, if you miss out on getting the money to sort of pay yourself, well, you know, the main thing is you're not going to sort of now have a massive amount of debt building up over here. So yeah, definitely deposits at the present time is a really good way of going. And you need to, I think, as long as you can cover your costs, you might not be making the profit, but if you can bring in the money to cover all the product that you need to buy. So if you're selling Nick a laptop and you only pay $500 for it, but you're going to sell it to him for $5,000, just get enough to cover the $500 that you're paying, sort of thing.
Bastard.
So yeah, so I think it's a really good idea to look at doing that, and bill in advance now instead of arrears, because you could be doing a lot of work, racking up a lot of debt, and those people can't pay at the moment.
Can I just
and also,
sorry, I just wanted to add something when Karl mentioned around, you know, reducing your expenses and really thinking where you're gonna, you know, like advertising. I think we also need to look at bigger ticket items. So say, for example, if your office rent is up for renewal over the next 3 months, have a serious thinking about, do you really need that big office space now that our landscape has shifted and a lot of people work from home? And, you know, maybe a co-working space would be a better option and a more affordable option for you guys. The same thing is like with leased cars, like when leases are ending or finishing, do you really need a leased car for every single one of your sales reps, knowing that they're not going to be going out there for the next 3 to 6 months, actively seeing clients? So can they carpool, and can you reduce your fleet? Like there's big ticket items you can have a look at, where you can go and say, okay, do I actually really need this right now? Or, you know, like, can I shift my, because just because we've done business the way we've done for X amount number of years doesn't mean that our business will ever go back to where we came from, right?
Yeah.
Like our landscape is changing. So really think about those fixed costs you think you can't get rid of. Really think about, do you really need those fixed costs?
There's one other thing I should have mentioned is for cash flow for your clients, and it's good for you, is look at things like the Genoa Pay and, you know, all the different bits and pieces that are out there. I know there was a bit of a drama with one of them earlier on in the piece where they were withholding paying funds across, but it's a good way for your clients. If you've got a, you know, you can spread your payments with Genoa Pay over 10 weeks, and it costs you a small fee to do that, but at least you know you're going to get the money up front, and then Genoa Pay, that's their problem to get the money in from your, you know, from your provider sort of thing. So that's something else to look at. You've just got to be careful. Just check what the fees and stuff are for that service, but it's a good way of still being able to sell products or services to clients, because they might be looking at it going, oh, I don't really need that right now, but if they've got a 10-week payment option, they might do it. So that's just another way of getting a bit of revenue in the door, using a third party to provide a payment portal type thing.
Also, moving from automatic payments to direct debits is quite good as well. Using places like Easy Debit and other facilities like that. I think Easy Debit costs $1.10 per transaction. So we run all our payment plans for clients who buy terms of trade through Easy Debit. And I've had 9,000 go through and had 2 not pay. Whereas our old failure rate was about 20%. People would miss payments and things like that. So having, especially like my gardener, as she uses, she sends me an invoice for the same amount every week. Why? I should just have like a direct debit form that I sign with her, because I might forget to pay one time, and then she's got to ring me, and then that's money gone.
Yeah.
So and also, if I pay her on a Thursday or a Tuesday before she comes, it doesn't really matter to me, but it will matter to her.
That's right.
So,
and what's your guys' thoughts on invoice factoring and factoring finance and all those?
Never.
As an option as well.
It's horrendous.
Okay, can we get a little bit of reasoning as to why?
I find, sometimes it can work. So say if you are like a scaffolder who needs to buy $400,000 worth of scaffolding for a huge job for like Mara or someone like that, then it can work. It can work there, because without factoring that big invoice, you can't get the goods. And now that makes sense. But if you're factoring your normal cash flow, then I think you need to look at your systems and what's gone wrong, because it'll cost you between 5 and 10% to factor. Now, in some industries like IT, that could be your hardware margin, you know, and about 1/10 of your, you know, other stuff. So you need to look at it. Is it worth that? Because if you've got an overdraft from the bank when you needed it, just don't. People get addicted to cash flow factoring. It just makes it so easy that they ended up just paying 5% a year for absolutely nothing, and it really alienates your client base. We had an advertising firm that we were dealing with, and they factored all their invoices. So they were sending the largest debt collection company in Australasia a factored invoice from another debt collection company, and we just said, we're not doing this. It's just insulting. So it is a great way to alienate your clients, and also to say to your clients that you don't really know how to run a business, because factoring still has a stigma about it.
Oh, that's awesome. So how about for the last 15 minutes, we move into a little bit different area and kind of open to discussion, maybe everyone who's with us today. So what I'm thinking is, right now, this first couple of weeks, we're having a little bit of a honeymoon period in the way of takeaways, and everyone is going and buying everything. But I think the income level, whether we want it or not, it is decreased, and it's going to be even tougher. We will realize that it's tougher because families didn't spend as much in the last few weeks, so we've got a bit of cash to burn. But so I guess the question is, what kind of advice can we give to business owners who just opened up for this period, and basically how to manage this uncertainty in a way of, we've got a peak now, so they're purchasing all the produce, they're paying the staff, and then it's going to be another drop. And what would you say, Carla or Nick or anyone else, in fact, how can we guesstimate, so to speak, what's going to happen for the next 3 months at least, if we're looking at a shorter period of time?
Well, that's the $1 million question, isn't it, really? We don't know what the economy is going to do. As you know, we'd like to think that as things open up, business confidence will increase and stuff like that, but we still don't know the fallout from lack of tourism, the fact that bars, restaurants, cafes and that can't open. So I think although everyone went mental yesterday and was queuing up at McDonald's from like 9 o'clock the night before to be first in the line, I can't imagine that that's going to be carrying on for the next few weeks. So if you're in one of those businesses where all of a sudden you're going to get this massive big spike, I think you need to be rational about it and go, this is just a one-off. We're going to taper back off. So I wouldn't be going out and buying 400 million meat patties expecting it to the drive-through of your restaurant to be out the street and 2 kilometres down the road for the next 3 months. I don't think that's realistic. I think we need to, or business owners need to just sit there and find a happy medium where they're at and just sort of cater for that. And then slowly, as things increase your purchase of product and stuff like that. I just don't think people really want to be jumping in and thinking we're back to level 3, potentially level 2 in 2 weeks. We're going to be back to where we were pre-COVID. It's not going to occur that quick. So I think business owners need to be a bit sensible and not try to get ahead of the horse. We just need to gently gallop along, trot along, and then go with the flow as things pick up.
I also think it depends on the industry. So there's industries right now which are making money and they're going to be booming through COVID-19. That's just a matter of fact. And, you know, like people, businesses are made or, you know, made redundant either way in a recession and in a bad economy. So it could be either way. When you're looking into your, as a business owner, look into your industry and which season in your business you're going in. So for example, tourism and hospitality was already heading into a quiet season regardless, because we're going into winter, especially here in the Bay of Plenty. You know that the bars are dead and you always wonder how they survive through winter, right? So they've made their money in summer. They've spent it all on the last 4 to 6, you know, in the next 4 weeks. And then they're going into a really tough winter for them. So a lot of people in the hospitality industry will do it really, really tough this year. So don't go out there expanding, growing, making it huge if you don't have the cash flow sitting behind you. If you have working capital and cash flow, great, right? Like this is your time to shine. But if you don't have the operating cash flow, don't go out there going all crazy. If you're in an industry like technology is booming right now, and it will be booming through the whole recession because people will be looking at alternatives. Like other industries, I think, will be growing through this process are things like co-working spaces. I really think that the need for co-working spaces will increase because people will try to decrease their fixed costs. So really the answer is, what industry are you in? Is it a booming industry through this process or is it not? Like, you know, construction will be tough because people will have less money to spend, so they're not going to be building the flash fancy houses as freely as they have. But on the other hand, real estate agents will be super busy because there will be lots of, especially in our area in the Bay of Plenty, lots of you know, apartments and second, third homes for sale because people are trying to get cash flow in. So I think really it depends on the industry you're working in.
I agree with you, Paulina. I got a client in Auckland who's a real estate agent for Ray White, and I was talking to him yesterday, and he was saying their office has been inundated with emails from Kiwi expats that are looking at getting out of Europe, Britain, the States to come back to New Zealand. So they're all looking for inner city apartments or quarter acre section or whatever. So they're predicting, or in his particular office, because he dealers in downtown Auckland, they're predicting in the next month or two a massive boom with expats coming back to New Zealand. But I suppose, again, it depends on how readily they can get back to New Zealand and stuff like that. But that's, yeah, I agree, industry perspective.
And the market will be flooded. Let's face it, the market will be flooded with your second home, third home, apart batches, and also, unfortunately, mortgagee sales. There will be, over the next 12 to 18 months, mortgagee sales coming people didn't expect because of impact on their businesses and everything else, or unemployment, etc., right? So yeah, it's definitely industry facing. If you are going into a season where it is meant to quieten down anyway, this is probably going to hit you even harder. And if it's an industry where you profit, unfortunately someone always profits out of a pandemic. Look at our banks. Like it's the truth. Like, so if you're in an industry where you profit from a crisis, then it's our responsibility. So this is, I know it sounds pretty harsh, but it's that industry's responsibility to keep spending money in our local community and in our local industry so that we can stabilize the economy. If we go offshore or if we go somewhere else with the money we are earning, then the money just disappears into the recession. If we go and say, right, we are making money, we want to expand, we can actually stabilize our economy a little bit more than any other way, I guess. It's my view.
I think it's also very important to understand your true exposure. So basically, make sure that any major clients you've got that you rely on, make sure that you have an insolvency indicator on their credit file. Make sure that you have access to that, because it's fairly easy to do. Make sure that you are a secured creditor, and if you are going to get hit with a liquidation, make sure that you can see it 3 to 6 months out. So there are ways of being able to do that, and it's almost free. That's how cheap it is. So it's like, I can usually give our clients between a 3 and 6 months heads up. I mean, unless it's a cataclysmic event, but most people don't just go fine liquidated unless there's like, and they're like the tourism industry. But make sure that if you can predict it, make sure you have access to that.
It's almost like the overarching advice here. You've got to plan. Like, if in the past we as a business owner, you can get away with kind of chugging along and doing your day-to-day and be busy with your day-to-day affairs. Right now, there is no way you can survive unless you look ahead and plan and do your income projections and do your income and your cash flow projections, and kind of be very tedious on the way of analysis and analyzing your client database, analyzing your new clients, analyzing your expenses. Just it's a much more up here work rather than just going out there and flipping burgers or whatever that is. Maybe as simple as that, or maybe much more complex, as we know. So
I think it's also doing your due diligence, right? Like we've been preaching this, and when you okay, I'll give you an outside business example. If you go and buy shares, or you go into trading forex, or you're doing any other, into your Bitcoin, the first thing everyone tells you to do is do your due diligence, understand who you're working with, where they come from, who they are, etc., etc. So that's a due diligence you as a business owner should be doing. Now, New Zealand likes to do everything by handshake. Yeah, mate, she'll be right? Like, we quite a lot, especially in manufacturing, because I've been in manufacturing for 10 years. They have, shake your hand, he'll pay, he'll be fine attitude, right? That's not how it works. As a business owner, you need to do your due diligence with who is across the table. And that's not just your suppliers, but also your customers.
I mean, it's actually worse than just she'll be right. Like, I've had clients and they've said, I've got this new client, he wants to spend 50 grand a month with me. And I'm saying, that's fine. But the last 26 companies that he's liquidated after 18 months. He's currently insolvent, and he's got a bankruptcy hanging over his head. And the guy goes, "Oh no, it's fine, we'll do it." And then he owed him 60 grand a month later.
Yeah, sometimes the evidence staring them in the face, but it's still ignored. So I guess, yeah, we have to open our mind and do the homework, and the long word for it is due diligence.
Yeah.
Paulina, how are we going for time, and do we have any questions?
We have an open round of questions. It's 3 minutes to 4, so we're doing really well. Anyone, any other questions? We have, if you do, feel free to jump and throw them into the chat or unmute yourself and share with us. But I think Nick and Karl, what's your, while we're waiting for any other questions to come in, what's your overarching feel of where we're heading over the next 6 months? In a 60 seconds summary. Let's start with you, Karl.
I would like to think that our economy's going to rebound. I'd like to think that. I think it's going to come down to whether or not we keep this COVID under wraps, I suppose. And I think the government's going to have to lead from the front in this, to be fair. Most business people that I've spoken to are pretty upbeat, and they're looking forward to get back into it again. And I think as long as everyone doesn't have this big doom and gloom mindset, I think things can work out quite well. But it's got to be a slog. It's not going to be a bounce back recovery. It's going to be a steep curve, pretty much. We're going to be slogging it out for a while. There will be businesses, like you said, Paulina, that won't survive, but there will be some that thrive and take off. And I think business owners that can get ahead of the game, adapt and sort of relaunch themselves and come up with different ways of doing business will be the ones that succeed.
Perfect. And we've seen some fantastic examples on a Friday in our Facebook group. We usually invite a business owner to share with us how they evolve and their good news stories about how they're surviving this period. So feel free to tune in there as well. Nick, here's a quick question for you. Where can we obtain an insolvency indicator?
I can set those up for people through Equifax. So basically, it monitors the client's credit file and then emails you any issues that company's having, and then I can show the clients how to read them and how to interpret them. So if someone just wants to email me, I can help them set it up.
Perfect. Joe.
So can we have Nick's email maybe somewhere, if it's possible, Nick?
We are sending out an invite tomorrow email tomorrow anyway, so we'll make sure that we'll include Karl's and Nick's contact email addresses. Pascal, I'll forward them to you.
I think something quite important is, and everyone's going to do it anyway, is to spend local. You know, we're so addicted to this cheap Chinese stuff, you know, because it costs $3 rather than $5. But if we don't spend local, we won't have any local businesses. So it's just, you know, yeah, I'm doing my bit. I'm spending as much as I can.
Yeah, I'm totally with you, and I'm just advocating every time we're on air that just spend money here, even in the bar, even be conscious that it's going to the coffee shop down the road rather than the big chain that's owned by some foreign country, whichever that is.
I mean, like, I can go online and buy like a laptop directly from Dell and have it sent to my house really cheap. But
why would you go to Dell?
Well, I don't know, you know, because they sell direct. But I can, if I spend that money locally, then at least, even if it's only $100, then that $100 is staying here. It's not going straight to America.
Then I might buy you a beer, Nick, and then it goes back into hospitality.
Make sure you buy the beer locally as well.
All right,
I don't think I've ever seen Tony buy a beer or a coffee in the whole 10 years I've known him.
That's a pretty tough one. Okay, thank you guys. It is 4 o'clock. Thank you so much for joining us again this week. We are looking forward to bringing you a new and fresh topic next week. Feel free to send us a message or an email in regards to what topic you would like to hear or who you would like to see on the panel, because obviously this is more for you than for us, and we want you guys to benefit from all of us. So much appreciated. Everyone have a great Wednesday and a great week. And if you want to hear a good news story, feel free to join us on Friday, where we're sharing about with Mike from the Big Smoke Barbecue and how he's evolved and moved his business into a completely new scenario. That's at 2 p.m. on Friday in our Facebook group. All right.
Thank you very much.
Nick and Karl, thank you so much for joining us. I really appreciate your time. And I'm sure there will be people sending you messages, asking you lots of questions.
Thank you very much, and I hope it wasn't too nerdy from me.
That was great. Awesome.
Thank you,
Fantastic work.
Valerie.
Thank you, guys.
See you later. Bye.
Yeah.
Bye.
Thanks all. Thanks, Carl. Thanks, Nick.
Thank you.
Cheers,
See you
guys.
later.